Back to work, back to work, back to work. It is about that time of day again here, folks, after all. It's Tuesday evening. It's April the 23rd, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Now, remember, I help new traders find predictable, dependable, profitable trading opportunities. And to do that, we use a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight, a little bit different. My job tonight is to identify the best setups, the best levels, the best, most profitable opportunities that we see setting up for tomorrow. That's Wednesday's trading session. And tonight, we're going to dig into oil, S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I'm going to start off tonight, though, with that black gold, that Texas tea, because oil is setting up with, well, if you follow my nightly newsletter, a beautiful two-legged pullback. Let's dive into that oil chart here tonight first, because if you follow my newsletter every evening, you know we've got something coming. But we have a little bit of a curveball here we got to be worried about. First of all, nice, big, strong bull market right now on the oil. I want to buy at support levels. So, of course, my little trick of finding support levels is I look for resistance levels. I know, right? And then I flip it around, and I use that to find a key level of support. So I'm looking to be a buyer off the low of that channel, and you can already see a beautiful pattern setting up here as we come off that high. I've got one leg. I got two legs. Draw that trend line down overhead, and we are looking for a buy opportunity here coming in off the low of that channel. Now, it's not all sunshine and rainbows right now because we've got this big red candle here. And of course, that big red candle tells me I've got to respect these sellers right now. Now, it doesn't mean I'm trying to sell this market, but I have to respect those sellers. I am looking for a buying opportunity, and I've got really three different scenarios I'm looking for right now. Three different type of scenarios. If we go up, we go down, go sideways. I'm going to put all of that plan together tonight on the video. I'll also talk about, because tomorrow, of course, is a big news day for oil traders, I'll also talk about what I'm looking for to dump this thing all the way back down to those lows again, because anything is possible in tomorrow's momentum or inventory trading session. We're going to jump into that oil chart in a lot more detail here in just a few moments. Over on the S&P, I'm going to go out on a limb right now and say whatever the earnings reports came out today, we're bullish. I'm going to go out on a limb right now and say I think the market's like the earnings reports today. I'll tell you, today was a great example of why you need to ignore the talking heads on television. Everybody was trying to throw cold water on earnings season this month. And of course, sure enough, headlines were ripping higher here today. Big, big, big blast higher. Now, anytime we see this much movement in one day, right, oftentimes the following day is a range. In fact, there are two very specific patterns you want to be watching for whenever a market rips like this, right? Three different patterns I'm looking for right now. One is a flag, one is a range, and one is a spike in channel. I'm going to break down three scenarios: flags, ranges, and a spike and channel, right, in tonight's video. It will take a small miracle for this thing to turn bearish, but we'll also talk about what I'm looking for here to be a seller as well. So we're obviously bullish. I want to buy this market. I'm waiting for one of three scenarios right now on the S&P. I'm going to break all three of those down in tonight's video for you guys, so stay tuned for more on that. Now, the Nasdaq went even further than the S&P, passing through its previous highs from last year and inches away from this measured move. So strong move up, one leg, two leg. We have a good idea of where these buyers were trying to go. But much like on the S&P, anytime we see this much movement in one day, the following day is probably going to give us, what was it again? It was a flag, it was a range, and it was that spike in channel. Those are three scenarios we're going to be prepping for tonight on that Nasdaq. It's And again, with more news coming out tomorrow, I'm also going to keep my eyes on what we need here to be a seller, because we're obviously a buyer right now on the Nasdaq. Until we see more information, we can't try to be a seller on this. But until we got some news coming out tomorrow morning, we're going to prep those 3 scenarios. I'll also talk about what I'm looking for here to be a seller on the NQ tomorrow as well, just in case the bottom falls out of this. So stay tuned on the NQ as well. How about some gold? Gold, switching back sides now to the bull side here now. Don't forget, gold is still dealing with that trading range right now. We saw that strong move down, that 2 try, and of course, now we're looking for that run, right, back up into that trading range. So I'm looking for a move back up around that 1279, 1280 area. Got my eyes on this measured move going higher. Nice strong 1, 2, 3 reversal off of that low tells me find my levels of support, and I'm looking to buy right off those levels of support. I have 2, maybe 3 different patterns I'm watching for on the pullback. My biggest concern is a short covering rally, which means we may not get much of a pullback. So if it does shoot higher, I've got 2 additional patterns I've got for you guys if it does shoot higher. So if I can get the pullback, I want to buy the pullback. I got 3 patterns there. And of course, if we run higher here, I've got a pair of different setups I'm watching for as we run higher here. So time is definitely of the essence here on gold right now. I'm going to put a plan together here to be a buyer here on gold. And of course, right, with that big move down, I'll also talk about what I need to be a seller here tomorrow. And of course, we'll plan all that out tonight. For the yellow metal. Over on the euro tonight, boy, euro continuing its bearish move lower. It's obvious, right? Obvious at this point now, we are a bear market. Anytime I have a trending market like this, I'm looking for channels. I'm marking up those lows. That lows fit nicely there up to those highs. And of course, this gives me a beautiful level of resistance here to sell off of. So I'm looking to sell the high of the channel, sell that big round number, right? Sell up in that battle zone. And really at this point, I've got a couple different patterns I'm watching for off the top of the channel. And I also, of course, have another set of patterns up around those battle zones. I'm also watching, of course, for that reversal, right? Because it could easily reverse right back up again. We'll talk about how to trade the reversal as well tonight on that euro, right? The euro futures contract. So looking to sell the euro off those highs, looking to be a buyer on the gold here for tomorrow. Haven't heard that in a while right out of my mouth. Nasdaq and the S&P got blasted higher, of course. We'll talk about those 3 scenarios on the E-minis for tomorrow. And of course, we'll dive into that oil because oil's got that beautiful 2-legged pullback setting up as we speak. But real quick though, before we jump into those charts, I want to make sure you never miss another newsletter. I want to make sure you're the first one to get this video hot off the presses every evening. And to do that, I send out my email to all of my subscribers. The first thing I do before I even publish on YouTube, I send out that email to all of my subscribers. And to make sure you're the first one on that list every evening, register for our mailing list. Promise never any spam. I wouldn't waste my own time, right, on spam these days, right? Only the good stuff. Give me your first name, your email address, and then hit that subscribe now button. And then don't forget, when you subscribe to join our list, right, our email list for our newsletter, make sure you check your inbox because I'm going to send you a welcome email. And remember, if you can't find the email, it could be inside of your spam folder, your promotions folder in Gmail. It could be inside your junk folder somewhere if you got one of those free email addresses. So make sure you're first in line every evening to get the good stuff every evening. Join our mailing list. Your name, your email address, and then check that inbox, check your spam, check your promotions folder. That way you can get that welcome email to not only verify your inbox, but to also make sure you get the good stuff on that welcome email. Then also don't forget, I am always listening. I am always asking for feedback. What do you love about this video? What do you hate about this video? If there's one thing you would change, what would it be? If there's one thing that you hope I never change, what would that be? What's your favorite way to use the newsletter? Guys, I am always trying to find ways to make this video better. The more feedback you give me, right, the more times you give me feedback, the better I can keep making this video. So drop me some feedback in the comment section below, or if you have any questions about the video tonight, any questions about the techniques I'm using, drop those comments in the comment section down there. And don't forget, while you're down there, if you love this video, if you watch it every evening, give me a thumbs up on that YouTube channel. It goes a long way to help promote my channel, and it means the world to me when you give me a thumbs up and when you post that feedback in the comment section below. And speaking of feedback, you know, I'm always here to answer your phone call too, right? You can always pick up the phone or use that live support tool in the upper right-hand corner. I realize this is a website, and I know most websites are all chat bots and call centers these days, but I'm old school. My wife, Megan, and I were two very hard-working human beings, and we are standing on the other side of that phone looking forward to answering your calls, answering all your questions, and giving you the real information you need to be successful in these crazy markets. So don't forget, call that toll-free phone number. Use that live support tool. These are not going to employees. They're going directly to the good stuff here in our corporate headquarters in Los Angeles, and we are so excited to speak with you and work with you. But first, we got some work to do tonight, don't we? We got some work to do. Tomorrow, we are only as good as our next setup, so we better get ready here. Tomorrow's Wednesday, the 24th day of the month. Now, I told you guys about this, right? We're going into earnings right now. Like I mentioned last night, got a bunch of earnings coming out. I think tomorrow we got Caterpillar. I think we got Microsoft tomorrow. So there's some big news tomorrow. There's big tech names tomorrow. There's big S&P 500 companies, right? Big large caps tomorrow as well. So big news reports coming out tomorrow morning. Make sure you're keeping your eyes open. We'll have our eyes open tomorrow, right in the trade room tomorrow, 8 o'clock Eastern time. So in addition to the earnings reports on the Nasdaq, earnings reports, of course, for the S&P markets tomorrow, the only real news we have scheduled for tomorrow, it's a relatively quiet news day. Apparently we've got Putin from Russia with Kim Jong-un or Kim Jong-un in North Korea. Apparently they're meeting tomorrow. Who knows if that will actually happen, and who knows if it will actually have any impact on the markets tomorrow. So relatively slow news day tomorrow as far as economic news goes, but big earnings reports coming out for Nasdaq markets, big earnings reports coming out for the S&P markets. And if you're an oil trader tomorrow morning, you've got that weekly inventory report at 10:30 Eastern time. Remember, this is not a joke, right? This is no joking matter. Very big news report every Wednesday morning for all you oil traders. And what I do is I kind of create a buffer around the news report. I don't trade the news. What I do is I stop trading oil at 10 o'clock. That's because it's always very slow leading up to that 10:30 news. And then after about 10:40, once kind of the dust has settled, so to speak, after that weekly inventory report comes out, we'll then get back in the saddle again and start looking for new opportunities. So tomorrow morning, if you're an oil trader like we are in our trade room, get there early, make that money early. After 10 o'clock, though, keep it close to the vest, because it gets very sloppy, very quiet in that time between 10 o'clock and 10:30. And then, of course, at 10:30, all hell breaks loose as the market goes wild here for 5 or 10 minutes, and then we'll get back into the action as of 10:40 Eastern time. All right, so we got expected to see more volatility tomorrow, right? More volatility with the earnings reports coming out for the S&P and the Nasdaq. And of course, oil traders, you got that big hurricane coming through tomorrow morning at 10:30 Eastern time. Don't forget, we'll be back in our trade room tomorrow, 8 o'clock Eastern time. We're going to prep it up tonight, and we'll execute together tomorrow, right, with all of our advanced members. Let's jump right in. We got a lot to cover here tonight, don't we? A lot to cover here tonight. Not to mention, we got Game 7. We got a bunch of Game 7s on TV tonight, too. That is something worth staying up for if you're on the East Coast for sure. Let's jump in, though. Oil, S&P, Nasdaq, gold, euro tonight. Let's start off here with the black gold, the Texas tea, the oil futures. Now, of course, I always ask myself whenever I open up a new chart, what type of day are we dealing with? Is this a range-bound day or is this a trending environment? Well, it's pretty easy to see with those higher highs and higher lows. This is a trending environment. Now, whenever I have a trending market, I always like to go out and find channels to buy at support. Now, most people would draw their channels, right, by coming across the lows, right? Most people would draw their channels by coming across the low, but if you do that, it doesn't give you a very good fit off that high. I find much better results drawing a bull channel, believe it or not, by drawing it off the highs first. Then I take that trend line and I bring it down and I draw it off of those lows. This creates what I call a hidden channel. Okay, the reason why this is so nice is because a lot of times this kind of catches sellers off guard because they assume now, right, this channel is a little bit, right? They assume they've got all this space to run, right? So one of the reasons why I like to use hidden channels is because it's hidden, right? It kind of fools those counter trend traders. So we're drawing on that hidden channel and that gives me that nice support level here and I want to be a buyer right off that level of support. Now, during that pullback, we can also see here, I've got a one leg, I have a two leg. Anytime I see a two-legged pullback like that, I like to draw my trend line down and I like to use that trend line as support on the opposite side. So, boy, you can definitely see here how we have a combination now of that, what I call a two-legged pullback, 1 and 2, in combination now with the low of that hidden channel. This is looking pretty darn good. The only problem I have to worry about is what we saw right here. This is what we call the API report. Every Tuesday at 4:30 Eastern Time, 4:30 p.m. Eastern Time, we hear from the American Petroleum Institute, right? It's kind of the leading number ahead of tomorrow's 10:30 weekly inventory report. So that big shot lower, that's coming off of that little 4:30 announcement that, of course, obviously just happened about an hour ago. That's a big deal because, as you can see, it's a pretty strong bear move down. Now, let's see if you guys watch this newsletter every evening. What's the rule, right? Anytime we see a strong move in one direction, what usually happens? We usually see a second leg. So I have to respect these bears right now. I do want to be a buyer off of this low, but I really don't want to buy just into that big red candle. So here are a couple different scenarios I'm watching for here tomorrow. One, do we go sideways, right, into a range here? Sometimes into these news events, again, we got the weekly inventory report tomorrow. Sometimes into those news events, we'll go sideways. So we'll plan for that tonight. Obviously, I want to see us go lower so I can be a buyer as we go lower. If the price goes lower here, what the plan is. Then, what if price goes higher? Right? So we'll plan what if it goes down, goes up, and goes sideways. Let's dig in. We know we're bullish, right? We know where those buyers are trying to go, right? We know where the target is up around that measured move right now. It's a pretty easy objective. I want to buy off that low back up to retest the high. Now, I've got that strong move down. Here's what I want to see. I want to see these sellers try to sell off that moving average pullback. Once we get those sellers trying to sell off that moving average, again, strong move down, right? Strong move down. Strong move down tells me bears will probably try to sell off that pullback. The problem is, horrible place to be selling. Horrible place to be selling. Lots of support down here. So I wait for the sellers to try to sell off the moving average. Again, I expect them to try because that's strong push off the news. But once they try to sell off that pullback off the moving average, now I know where the pain points are, right? Like we talked about last night on the newsletter, right? Now we know where the pain points are, and I can buy right into those stop losses. Now from there, don't chase it. Wait to buy the pullback. That pullback is classic, right? A great 1-2 combination. A failure setup. Again, sellers try to sell it going lower. They fail. We then wait, we buy the pullback too. So we're buying into the stops, right? Then, of course, buying the pullback off that same level where we came into, okay? That's the plan if the market pulls back, failure into pullback as we go. What if we don't get it, right? What if we get stuck in the mud here right now, right? What if we get stuck in the mud? Then what do we do? If the market starts going sideways here and we get stuck in the mud right now what do we do? Well, now we have an overall bullishness, and I want to use that trading range in combination with the range expansions and the proper entry pattern. For example, if I find a range here in the short term, I can take that trading range, I can copy and paste it down and create a level of support down here. Okay, we call these range expansions. Okay, so I find that level of support. Once I have that level of support, now I look for the pattern. The pattern is, it's called a two-try failure pattern. We wait for the bears to try once, we wait for the bears to try twice, and we look to buy back into those stop losses, right? We let the bears try once, okay? Those are the breakout sellers. Then we let the pullback sellers, we let them get in. Once we know we got the breakout sellers and the pullback sellers, now, right? Now we're buying right into those stop losses, going back up to retest the high. Now, don't forget, best targets on these, pendulum swing. The amount of the move below, the amount of the move above, that's going to be your juicy target there. That'll be your big reliable target, and then your runner target up around that measured move from there. Now, what if we go higher here, right? What if we jump higher here? If we jump higher, we know exactly where they're trying to go. So now we look for the two-try breakout. Strong move up, bears try once, bears try twice. I'm looking for a trap low and a buy from there. I don't want to get caught chasing it as it goes higher. So if it just runs higher here, don't just buy high, because it could be setting up here for sellers to run this thing right back down again. You don't want to make it a habit of buying high. You want to buy low. So how do you buy low? Let the bears try to sell it once. Let them try to sell it twice. I want to see that lower low, that trap, and that's going to be my best option to buy it as it goes higher. So three basic scenarios. One is a move lower, a failure into a pullback combination. Two, if we see a trading range here, right? Mark up your range expansions. 1, 2, up, right? Pendulum swing is the most reliable target. As the market goes higher, strong move up. 1 try. 2 try, get that trap, right? Trap patterns now as we go back up, right, to retest that measured move. The only scenario we haven't talked about here is the bearish scenario. How does the market turn bearish? We need what we call a 1, 2, 3 reversal. Now, it's just like the name suggests. 1, strong move against the trend. 2, pull back to the moving average. 3, strong move off the moving average. Now be aware, right? You see these all the time where we see a strong move, we see a pullback, but we don't see continuation. And look what happens. It fails and runs right back up. So if this thing goes strong move down, we get that pullback. Remember, that's not the sell you want. Okay, that could easily be a failure, right, into a pullback, and your stop losses, because you couldn't resist it, your stop losses are now fueling this fire going back up to retest that high. So it's got to be a 1, a 2, and a 3. Nice hard jump off. Mark up that low, all the way back to the high. Find that hidden channel, right? All the way back to that high up there. Forget about that high. That high is worthless. Find that high, and then that's where your sweet spot is, and we're selling off that high, right? That's your sell if we get the reversal. Boy, we've covered a lot here in only the first chart of this nightly newsletter. I want to keep going. I get so much I want to share with you, but I want to also give you all the information you need about all these patterns. Traps, 2-try failures, right? 2-try breakouts. So here's what I'll do. I'll put a link up here in the upper right-hand corner. I'll also put a big red button right now on the homepage of our blog. Below the video or in the upper right-hand corner, grab that free trading class. That free trading class will break down the entire 3-step strategy, the same strategy we use in our trade room every morning. It'll also talk about my 4 favorite patterns, and you'll learn all about them right inside that free trading course. So don't delay, pause the video, grab the free course, get registered. I'll see you behind the curtain inside of a website here at schooloftrade.com, and you'll love learning about that 3-step strategy. In the meantime, though, let's keep moving. We got a lot more to cover here tonight. And again, like I said, we want to get you guys out of here so you can enjoy the rest of your evening. Over on the S&P right now, I always try to ask myself, right, what type of scenario are we dealing with? Is this a trending environment or is this a range-bound environment? It's pretty easy to see the market definitely got on its horse this morning with a trending environment, but now you'll notice with double tops coming off that high, anytime I see a double top, I always know in a bull market, double tops like this, almost always going to be a trading range, right? Almost always going to be, right, a trading range. In fact, anytime we have this much strength in one direction, the following day is almost always going to be a range-bound day. So it's important that we get serious about keeping those range, right, those range clues in mind. In all reality, though, there are 3 basic structures I look for when a market makes a move like this. One of them is a spike in channel. Now, spike and channel patterns are notorious for a pullback into the base of the channel. The second situation would be a flag pattern. It's pretty much the opposite of a spike and channel, right? It's a flag pattern, right? It's a strong move up into a bear channel, right? Just the opposite of a spike and channel. On this one, though, these are a bit tricky. You got to get above it, pull back, and go. That's the best way to trade a flag pattern. And then, of course, you get your range, right? Your strong move up, right, into that trading range. Now, we talked briefly about this on oil. What's the best way to range-bound market? Yep, find that level of support down here, right? Take the size of that range, copy and paste it down, find those support levels, and, of course, we're buying with that 2-try failure down below that low. So those are 3 scenarios I'm watching for right now. Now, right now, it looks like we're dealing with the 3rd scenario, right? That's what it looks like right now. But with more earnings reports coming out tomorrow, we could easily see this morph into a spike in channel or even a flag pattern later in the session tomorrow morning. So how do you tell the difference? How do you know which is which? Well, it all depends on what we get as the market goes higher, right? If it goes up, pulls back, and goes higher high, well, now you know it's not a range, it's not a flag, it's a spike in channel. So if I get that higher high, right? If I get that higher high, now I know exactly where that channel is now. I can buy the low of the channel, and again, I can buy the dip below it, right? Or if I see it go up, pull back, double top, and bounce, bingo. Now I know there's my range. Now I know take that range, bring it down. Now I know where that level of support is. And then again, I'm using that 1, 2 to buy it back up. Or maybe we get that flag. Flags are pretty easy too, because flags, what they'll do is they'll give you that lower high. And once you see that lower high, then you draw the trend line down. That usually ends up determining where that low is, right? Kind of like a little bit of a hidden trend line there. And then once you got your channel, now it's getting above it and buying it right up from there. So it really all depends on what happens after that pullback. Strong move up, we pull back, we double top. We pull back off that high, that's a range. Now, take the size of that range, copy and paste it down, right? And that puts us right inside this battle zone. So now I want to be a buyer, right, as we pull back. And of course, the same idea will apply to the Nasdaq. The Nasdaq's a little bit less obvious right now, so we'll talk about that here in a moment. Now, let's say, for example, we open up and we go higher, right? If we go higher, now we know. Draw off that high, down to that low, and now we know where we want to be a buyer here, right? So it's a relatively easy idea here, right? Right now, it's just a matter of waiting for more information. Now, there is potential here for a flag. I don't think it's a little bit less realistic, obviously, because we'd have to get this down from there, right? Have to pull back from there. But honestly, that's not a flag pattern, right? That's going to be just a simple range, right, with a two-legged pullback. That's all that's going to be, right? That'll be a two-legged pullback, same basic idea there. So it looks like right now the S&P is either going to be a range or it's going to be a spike in channel. Or who knows, right? Who knows what, for example, we got Caterpillar reporting tomorrow morning. Who knows, right? This could easily reverse. So we'll talk about the 1-2 reversal as well. The bottom line right now is I can easily see this range. Okay, that range is very narrow, right? It's very narrow. Now you'll learn all the tricks that I have up my sleeve for ranges inside of the membership classes here at School of Trade. But most important thing, anytime I see a narrow range, I know that we're probably going to want to go at least two deviations down. Right? So notice what I'm doing. I'm taking that range. I'm not just going one level down. I'm going 2, 3, 4. And the reason for that is because nobody's going to want to buy this little shallow pullback. It's not a deep enough pullback yet. So when you see a real narrow range like this, you want to be at least 1, 2 deviations down, which means I'm really looking at this area right here, 29.30 to 29.30 down to that 29.26 area. What I really like is that reversal line. Those are 2 prior resistance levels that can be used as support. Combine those with those 2 range expansions down here, and this overlap right here, that's really the sweet spot for us right now. We've got major support levels, right, called the battle zone. We also, of course, have, right, those range expansion levels as well. So really at this point, it's all about, do we get the pullback? And there are 2, let's say 3 basic pullbacks that you want to be aware of. Are you ready? First of all, we have the shallow pullback, right? The shallow pullback goes down, it goes into my deviation zones, right? We then see the failure, right? The bears will try to sell it. They fail, and we're buying, right, into their failure for the pullback and then up from there. Same basic pattern sequence I just talked about on the oil. Right? Shallow pullback. So shallow pullback comes down, moving average comes over, sellers try to sell it, we know where their pain is, and we're buying into that failure and then buying the pullback, right, to finish off that move. Now, what if earnings come out tomorrow and this thing gets killed, right? Big drop down. There are 2 types of big pullback patterns you want to look for. One is going to be a 2-legged pullback, which I touched on a little bit earlier, right? Get above it and use that trend line now as a key level of support. But you also want to be considering here if we do get a real strong run lower, right? If it kind of jackknifes lower here and takes off to the downside, then what you want to do is you want to still be looking long until they can hold and go with that 1, 2, 3 reversal. You're still thinking this is just a pullback. But momentum is so darn strong that you've got to let these bears try once, let them try twice, and then we can buy from there. So deep pullbacks, right? Deep pullbacks mean what? Momentum shifts, right? Momentum starts to shift now, and sellers will try once, let them try twice, and we can buy up from there. So shallow pullback is a failure into pullback going up. 2-legged pullback, right? Draw the trend line over and up and over. Or, right, if it darts lower here, 1, 2, and then up we go from there. Now, don't forget, if we sit inside this range, right, if we sit right here for a while, what do we do then? Same basic plan, right? 1 try, 2 try, back up. Let those bears try once, let them try twice, and we're buying into those failures. Now, what if the market jumps? What if the market jumps? There are ultimately 3 scenarios you're watching for if the market jumps. One would be the aggressive one. We call these 2-try breakouts. Strong move up, 1, 2, and go. Key here is strong break higher. Let the bears try once. Let them try twice. Once you've got those initial sellers, really it's buyers taking profit here. Then you got bears fading the high. Then you know where the stops are, and you can buy into those stops. That's obviously the most aggressive way to do it. Another pattern I'm always watching for is the 1, 2, 3 breakout. Mark up that high, mark up that low. Remember, hidden channel, and then we're buying, right, the pullback from there. Okay, so keep your eyes open for a small 1, 2, 3. We may also see just that strong move up and a sharp pullback. Watch that spike in channel now, right? Watch that spike in channel. We pull back to the moving average. It will likely be a failure pattern here into a pullback, and the same basic pattern we've talked about a couple times already. So if it does jump higher here but then pulls right back, watching that spike in channel here, right? And again, buying the failure, buying the pullback up to what honestly might end up being a little bit closer, right, to that September 21st high, right, back from 2018, right, back to that 29.56 half. So the S&P still has some breathing room overhead here. Now, what does a bear market look like? Again, I wouldn't trust a sharp pullback here, right? I wouldn't trust it because it went so far today. If it pulls back sharply, it may just stumble around here for a while before it runs right back up. So you've got to have the 1, you've got to have the 2, and you got to have the 3. You got to have the 3-step reversal. Mark up that low, mark up that low, up to that high, right? And then we're selling off of that high. I know what you're thinking. Why not sell that first pullback back there? Because it's not a proven reversal yet. If you sell in a bull market, well, don't be surprised if you become roadkill on the way back up, right, to retest those highs. Because professionals like myself are watching to buy right into those weak hand stop losses. So now you've got a good plan there on the S&P. And I know I'm running late on the video tonight, so thank you so much for tuning in here and sticking with me here tonight. But the bottom line is same basic strategy here applies to the Nasdaq. Now the Nasdaq's kind of interesting because again, the S&P pretty much got what it came for, right? If you look at the S&P with a bigger picture here, you can see the S&P got 1 leg, 2 legs up, and we're pretty much sitting right at that measured move. On the Nasdaq, it does look like that Nasdaq might not quite be totally done yet, right? You got that measured move waiting overhead. That's going to be where, we might see it open up in Asia and then smack higher, right? It may open right up and right back up to that high, and then that may come right back down again. So we may end up smacking higher and then right back down again. There are three basic structures you're waiting for. I've already got the spike in channel ready for us. Right, that spike in channel already looks great here for us tonight. Looking for a pullback. Moving average comes over, right? Failure into pullback, right? And up we go from there, right? Failure pattern, pullback pattern. And again, remember guys, I'm just drawing on the chart right now, but if you want to see hundreds of examples of real setups just like these, grab that free course. It's in the upper right-hand corner. It's also linked up in that big red button right below the video tonight on our trading blog here at Sideways Markets. So that's the plan. If we get the pullback, right? The pullback, the failure, right? The pullback, and we go up from there. Or maybe it's a 2-legged pullback, right? 1, 2, up and over, right? And buying from there. No matter what, if we do get that pullback, we're looking for that pullback pattern down around in that battle zone, down around the low of that, right? Of that channel. And where's my target? Up around that measured move. If it goes sideways, it does look rangy now, doesn't it? It certainly does. We go up, we pull back, we go up. That big wick is a big, big giveaway. If we do pull back now we have a trading range. If I have that trading range, I'll mark it up real quickly here, right? Take that trading range, copy and paste it down, right? That gives us what? That gives us our support zone right there. And look where it lines up. It lines up right there with that reversal line, that prior level of resistance. So that's a great spot right there as well, right? So keep your eyes open, right? If this is a range, right, it's obviously a range-bound market. So if it is a range, it's a 1. It's a 2. Remember, you want to see him try once. You want to see him try twice. Then we can buy up into that range. Now, remember, sometimes these pullbacks get much bigger. Sometimes they go nice and deep, and the second try is not as great. 1 try, 2 try. That works as well, right? So it's not always going to be a 1, a 2, a double bottom like I'm drawing it right now. It could be a 1, a 2, lower low. It could be a 1, a 2, a higher low, and of course it could be a double bottom, right, as well. I'm going to talk a lot more about those types of failure setups inside that free class I mentioned earlier. So if you're a serious trader, you're going to want to make sure you get started with the free course as soon or sooner than later, right? That way you can get all the knowledge you need to take control of your career. So that takes care of the range here. And then what would be the flag pattern? So a flag pattern, how do you know it's a flag? Flag patterns are always very slow. They're always very slow. The market takes the elevator up and then takes the stairs down. Flag patterns always seem to be very slow. And it's one of the most challenging parts about flag patterns because they feel like the buyers gave up. But sure enough, the sluggishness of that pullback is just buyers getting into more positions and waiting for that move going back up to retest the high. So if we start seeing this thing slowly pulling back here, right? Mark up that trend line. You don't really need to draw the channel. The trend line is more important. Then, of course, we go up, over, and looking for that buy, right, going higher here. What if we do break out higher, right? What's the plan if we keep going higher? Well, here's the hard part. The hard part is there's nothing up here, right? I mean, we are literally, I mean, obviously, big round number, 7,900, but there's nothing up here. Look at a daily chart right now, this sucker, and this thing is, right, it's red hot, right? So it's all-time highs, right? We're right up in the nosebleed seats right now. So there's no easy targets for me to give you, but if we do see again, strong move up, 1, 2, that will be your 2-try breakout, right? Buying that trap low, or my favorite here would be the 1, 2, 3. You got it. Mark up that high. Mark up that high, bring it down to that low, and then that's where our sweet spot is right there, right? Buying that sweet spot right off of that low. And then what we'll do from there is we'll use these measured moves, right, for our guide, right? So we'll use that leg. If it does pull back, we'll use that same measurement now, right, to calculate the next target overhead. And we'll obviously do this tomorrow together too. So once we get there tomorrow, we'll do it together tomorrow morning in our trade room. And then again, what's a reversal look like? Reversal, 1, 2, 3. Again, be very careful. Don't sell the first pullback, right? Sell the second one. That's a lot more reliable. If there's one thing you learn off this newsletter, I hope it is you can't assume the market's reversing just because it gives you a deep pullback. Deep pullbacks, especially after a red-hot day like today, a deep pullback is likely going to be seen as a bargain price for this market. It'd be very difficult there to make money trying to just simply sell on a pullback there because you're doing exactly the opposite of professionals in the market. But again, if you wait patiently for it and actually get that 1, 2, 3 reversal, then you get a very reliable sell, and that target, of course, is back down to retest that low. Let's keep moving. Nasdaq and S&P are, again, probably going to be range bound here. Anytime we see a strong move in one direction or strong move in one day like that, oftentimes the following day is a range bound market. Over to the yellow metal, the gold futures, the GC here. Now, don't forget, just in case you missed this earlier on in the month, we had a bear move down into that trading range. Right? We have been making it a habit here of selling, right, above the top of that trading range. Great example here of the 2-try failures. 1, 2, failure back down. 1, 2, failure back down. Well, now we get this strong move down, right? And we talked about this last night on the newsletter, right? Because the market's bearish, you want that 1, that 2, and then back up, right? So you're not going to take the straight failure. You wouldn't buy that failure right there, right? You would wait for it to go, right, and go 1, 2, and then buy up from there. So buyers are already long on this, but I think you can already tell what's setting up here right now, right? I think you already see what's happening right now. We get that strong move off the moving average. Momentum is clearly turning to go back into that range. Right? That big range, that's the magnet, right? That's the magnet. That's the magnet trying to draw this market back in again. So we know we have that strong 1, 2, 3 reversal. We know the bulls have momentum back, right, in control again. And look right here. There's your failure into your pullback setting up as we speak, I'm marking up these highs. I'm marking up that low. Beautiful spot right there, right, to be a buyer. So ultimately right now, because we're a range-bound market, and I know we had a strong move down today, but obviously a strong move is not enough, right? It has to hold. It's got to hold this move and go through. It doesn't, so of course now we're expecting it to snap back up into that trading range. So now we know where the target is, right? We know the target now is back up into that trading range, right? 79.3, 76.6, that's our target. I don't want to buy high up here because for all I know, there could be sellers waiting up here to drive me out of this market. So I don't want to buy high. I want to buy low. As I get this pullback, I'm watching for a measured move. I've got that low right there. It looks like they got it, but they never came back to get that high. So that's a major level of support right there. That support level is critical now because now we're going to use that level. I want to see a pullback. I want to see moving average come over. I want to see sellers, you guessed it, try to sell that pullback. It can be very, very subtle. It does not need to be a very big, obvious sell off that moving average, and that will set me up now for that failure into pullback, and then back up we go. I hope by now, you can see that I pretty much use the same tactics, the same way. It just all depends on what the market gives me at that time. Every day the markets give us like a puzzle, and we've got to figure that puzzle out. Now, how do you get good at doing a puzzle? Experience, right? The more times you see the puzzle, the faster you can get it all put together. That's the only reason why I can do it so quickly is because I've seen these puzzle pieces every morning for almost 15 years, right? After doing it for almost 15 years, you'll be pretty quick at this too, right? There's also a shortcut, obviously. You can really leapfrog that 15-year process by simply looking over my shoulder and doing it with me every day, right? You can learn on your own, or you can learn by doing it with somebody who's already done it before. I think you probably already know the faster route on that. So make no mistake, every market's a little bit different, but it's either a range or a trend. And then once we know what we're dealing with, we use the right tools, we find the right levels, and we wait for the pattern to trigger. Simple as that. And again, I go over most of this inside that free course I mentioned earlier. Now, my big concern right now on gold is honestly this move here. My big concern on gold right now is that move down. No, it's not the momentum because momentum definitely shifted here. I'm not worried about the bears having control. What I'm worried about is all the sellers who are currently short, they may start realizing they're wrong, and we may get what's called a short covering rally. Right now, a short covering rally in my opinion, it's one of the hardest things to trade as a new trader. Why? Because what's going to happen is the market will run higher here without any pullbacks. So what happens a lot of times, obviously, as a rookie trader is you'll see a break up and you'll wait for that deep pullback to buy the deep pullback. But if this market moving higher is based on sellers getting out, it's not going to pull back. And that's why a short covering rally is one of the hardest things to learn as a new trader. What'll happen is it'll jump and it won't pull back. It won't pull back. It won't pull back, right? You're waiting down here going, come on, man, pull back here for me so I can buy down here. You'll be waiting all day, right? It's not going to pull back that far in a lot of situations. So if we do get the pullback, wonderful, right? I mean, if we go up and then pull back, I mean, hey, happy birthday to me, right? We'll take that failure into that pullback, right? We'll grab that no sweat. However, what happens a lot of times is when a market moves down like that and then reverses back up, it ends up jumping. So here's what you're looking for. It's all about personality. If the market runs higher, you know it's a short covering rally. Then look for the 1, 2 breakout. Now, it really all depends on where you can get this thing. If it runs up into this range up here, you got to make sure you get that trap. So it's 1, it's 2, and it's trap low and in. Okay, now why do I say look for a trap? Because remember, the objective is to get back into the range. And when I find myself knocking on the door of that range, I want to make sure I buy as low as possible, right? I don't want to buy inside that range. I want to buy with a trap. trap patterns are my way of buying without buying high. Now, in a perfect world, it would go up 1 and 2, and you'd get it before we go into that range. So if we run up here, we see 1, 2, before we get in that range, you don't need to have that trap. But if it does go up into that range, 1, 2, I would assume that's going to be the case. So you want to see that trap pattern. If it runs just straight up in and gets stopped around here now it's a bull market with a range, right? You know the drill, right? Mark up the range support, 1, 2, and then back up from there. 1, 2, and then buying up from there. Last but not least, how do we turn bearish? How do we turn bearish? There are a couple things I'm watching for. One is going to be an attempt to go lower, followed by a failure, right, into a pullback and go up, right? So watch out for this market to attempt going lower. Again, trying to sell off that moving average, and we're buying into that failure, buying that pullback. But really at this point, the only way I can really be a seller is if they get back to retest that low. Because that's the only way that I can really feel like the bears have confirmed that they've broken out of this range, right? Because anytime I see a strong move out like this, if they can't get back down to retest that low, what's going to happen? It'll give us a higher low. And that higher low is going to be a nightmare for these sellers. If they can't get back down to retest that low, if they miss that low, it's almost dead in the water here for these bears. And again, right, well, let's go back up into that range here. So again, if we do make a run lower, failure into pullback back up, or if they can make that run back down to that range low, I would imagine if they can get that run back down to that range low, we either see one of two scenarios. Either it turns into a new spike in channel, sell the base of that channel, right? We talked about spike in channels earlier in the opposite direction, obviously, right? So spike in channel going lower, or we see it bounce 1, 2, and back up in from there. So there's not a lot of sell scenarios here that really make sense unless we get that run through that low. All right, guys, really interesting chart here on the gold. Can't wait to see what we get here next few hours here. And of course, wrapping up tonight on the mighty euro. Euro is bearish. What type of market conditions are we dealing with? Is this a range like the gold, or is this a trend? It's a trend, right? It's pretty easy to see. Strong move down into that spike in channel, right? Spike in channels are notorious for pulling back into the base. We talked about that last night, right? And what do? They run it lower. So now we've got strong move number 1, second leg, they get their measured move and they bounce. Now, at this point, it's pretty easy to see. You can draw a trend line coming up off of this low, and obviously that will set up now for the 1, 2-legged pullback. So we already kind of know what pattern we're looking for here just because we have that potential trend line coming up. That trend line's pretty easy to see if you draw it in right now. This would be a 1, a 2, right? A 2-legged pullback pattern, right? Going lower. I am also keeping my eyes on a sharper pullback. That sharper pullback, because it will be such a big pullback, what you want to look for is that nested 2 try. That 1 try for the buyers, 2 try for the buyers, and sell it back down. Let those buyers try once. Let those buyers try twice, and we'll sell it right back into those pain points, right? Where's the pain? Sell into the pain point. And then don't forget, if they do get the 1, 2, 3 reversal, which could easily happen here, mark up that high, mark up that high, down to that low, right? And we're buying off the low of that channel. Okay, target at that point now is all the way back up to retest those highs, just shy of 14,000, right? Now, I'll tell you right now, though, we have seen this euro try and try and try to turn bullish, but it just has a hard time getting turned around right now. So be very careful trying to be a buyer on this. Stay patient for the 1, 2, 3 reversal. Very much a bear market right now on the euro for many more fundamental reasons than I have time to go over here tonight on this video newsletter. So again, 2-legged pullback, right? 2-legged pullback, 1, 2, up and over, right? Don't forget that could also be used with a failure pattern there as well. Failure into pullback. That will also work too, right? Now you've got a two-legged pullback, a failure pattern, and a pullback pattern on the way back down. Or it's the 1, 2, 3 reversal. Find that new channel, buy the low of that channel. Or it's that move up. We don't get the reversal. We try it again, and then big signal candle, back down, selling into those pain points. Boy, oh boy, we have covered a lot in this video. Euro, gold, Nasdaq, E-minis. All we need now is to kick some butt tomorrow morning in our trade room. I hope I see you there. 8 o'clock Eastern time, Monday through Friday. The first thing we do every morning is a little morning ritual. We go over all of our patterns, all of our rules. We check the news schedule, and we execute the strategy together every morning, 8 o'clock Eastern time. To get started, to join me tomorrow morning in our trade room, grab the advanced course. The advanced course includes the beginner, the intermediate, and that big button is right below me tonight on this video. If you're not ready for membership, grab the free trial. Right to the left of me tonight, left of my ugly mug, there's that big red button for our free trial. That free trial gives you your free course, a free pass to join the trade room, and you'll learn all about that 3-step strategy that we use every morning with all of our clients. But for now, I've taken way too much of your valuable time. So let's wrap it up for tonight. We'll be back tomorrow morning, 8 o'clock Eastern time. If we don't see you guys there, we'll see you same time, same place tomorrow night in the next edition of our nightly newsletter. Be well out there. Be nice to each other. Who you guys got in the games tonight here? I have a feeling the Maple Leafs are starting to get a little bit of deja vu the last couple of years, right? I hope my Bruins can pull this thing together here to win game number 7. Bottom line, though, is who you got tonight in the games. Game 7, 2 game 7s tonight, right, on television in the U.S. Drop me some comments. Give me a thumbs up. Subscribe. Join the list. And join tomorrow morning, 8 o'clock Eastern time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.